What are junk bonds? Well, formerly known as high-yield bonds, these are debt securities issued by companies with lower credit ratings than investment-grade bonds. Now, the real question is, how do you identify them? As every bond is rated by a credit rating agency, here is the range within which you can spot them. 1. High risk. The junk bonds which have this quality are rated as BA or B by Moody's, and BB or B by Standard & Poor's. S&P, which means that the issuing authority can repay the sum as of now, but might default if the economic condition deteriorates. 2. Highest risk. If you find a bond in this category, then it would be rated as CAA, CA, or C by Moody's, and CCC, CC, or C by S&P, which translates into a fact that the issuer is more likely to default than the aforementioned category. But if micro and macroeconomic conditions remain favorable, then the company will be able to make payments. 3. In default. As the name suggests, the issuing body is guilty of failing to repay a loan and is rated as C by Moody's and a D by S&P. Why would a company opt for a higher risk bond, and what does this mean for investors? Let's break it down. Now, you might be wondering, why would anyone invest in bonds that are considered junk? Well, the answer lies in the potential for higher returns. Junk bonds typically offer higher yields compared to safer investments, attracting investors seeking greater income. But, of course, with higher returns come higher risks. How can you buy junk bonds? 1. Direct investment. Bonds markets, or even money markets as a whole, have never been liquid for retail investors, and have always been institutional investors' play zone. But that doesn't mean you can't invest in junk bonds directly. All you need is a brokerage account, and then you are good to go. 2. Exchange-traded funds, ETFs. These are also a good option to indirectly invest in a diversified portfolio of junk bonds, in addition to the feasibility of getting sold and bought just like stocks in the exchange. But if at all you plan to approach this investment avenue via the route of the ETF, make sure that you check funds fee, historical performance, and rating of the desired fund. 3. Mutual funds. The debt category of mutual funds also offers a route to invest in such bonds. All that an investor needs to take care of is turnover ratio, expense ratio, rating of the fund along with fund managers and fund's historical performance. And that wraps up our exploration of junk bonds, a financial instrument that certainly keeps investors on their toes. Remember, while the allure of high returns is enticing, it's crucial to conduct thorough research and assess your risk tolerance before diving into the world of junk bonds. If you found this video informative, don't forget to like, subscribe, and hit the bell for more content on finance, investing, and everything in between. Until next time.